موارد فاينانس فالك طيب.
So guys, to close today's program, we will be jumping into the future of lending, where new models meet real customer needs. A lot to hear from and a lot to learn from some of the top experts in the field. Please help me welcome Hassan Abdullah, Head of Client Coverage at Vision Bank. Hassan, thank you very much for joining us. Please have a seat. Yeah, and Fawaz Ghazal, CEO at Flooss, Bahrain. Fawaz, thank you very much for joining us. Please have a seat. And Riccardo Zanella, Credit Director at Credit It. And Raine Renaldi, President at Indonesian Bankers Club. And leading this panel, Kumar, Senior Partner at Sedar Management Consulting. Kumar, thank you for leading this panel. Please have a seat and Mr. Kumar. Until Rand is ready to move forward with this, I invite you to scan the QR code number 4 on your table, and it will take you to some voting questions. Your answers will help us guide this panel. So Ram, the stage is yours.
Thank you. Am I audible? Thank you. Well, good afternoon, gentlemen. To start with, a reminder, I think we are sitting between the lunch and the audience. With that, before we start, may I just see how we are actually doing on our scores here. Looks like peer-to-peer lending is leading the show. And maybe that sets the tone for our conversation today, Hassan. And I'm going to ask you, go with you first. Since peer-to-peer lending seems to be rocking the show there, how do you see the whole context of peer-to-peer lending, A, in the regulatory context, and B, from an innovation context?
Hi. Yeah, with respect to peer-to-peer and lending platform, I believe the past couple of years we have seen a considerable enhancement, upward trend in such platforms. I believe mainly contributed to two main factors that have contributed to this. First and foremost is obviously from a regulation perspective, we have seen the central bank and the regulators aggressively in the past couple of years provide proper regulation and frameworks set in place. I recall something like the loan-based crowdfunding regulation in 2020, as well as they have mentioned open finance and open banking regulation in 2024, has properly provided a framework and regulation that sets parameters in place to remove that so-called bad apples from the peer-to-peer lending. As important as this is obviously the innovation aspect, from fintechs, digitalization, as well as innovations in the past couple of years have considerably enhanced peer-to-peer and lending platforms. When we're talking about machine learning, we're talking about generative AI, credit analysis, all of this has contributed to having a better risk assessment within these platforms, within the peer-to-peer, and subsequently enhance the overall procedure. So, from a banking perspective, do we consider this as a threat? On the contrary. I'll take an example of us at Vision Bank. We are properly collaborating with lending platforms, peer-to-peer platforms, fintechs, to be able to synergize together and reach a position where we upscale the industry responsibly and positively.
Very interesting. So You do see regulation as a very supportive environment. I think that's a very important aspect of the discussion. And I guess the second point you talked about, which is going back to the kind of players, and we're actually talking about making sure it's accessible to everybody. And that's what I would love to take to you, Fawaz. And I think this is a discussion really about, we talk about financial inclusion, we talk about actually getting a very large audience onboarded through this, what we call as alternative credit, and looking to actually the future of credit. We clearly see the context of BNPL, buy now, pay later, playing a very critical role, right? And it obviously has an impact also on customer behavior. So if I may, ask you to share some views from your experience, A, on how you see BNPL really making an impact on customer behavior, and B, how do you see this actually driving financial inclusion, which probably is the context of a large number of people here in the room today?
So thank you for having me here. BNPL is one of the products that we're providing today in the market, and part of it also, we provide also cash loans. And we're seeing that shift, that customer behavior is different platforms. As a responsible lender, and that's what the regulator wants you to ensure that you're giving loans responsibly to consumers and you're dragging them to debt. And that's the concern of regulators. And you're trying to use the AI and machine learning and different credit models and alternative data to be able to store customers at the point of sale for BNPL. So that's an empowerment. To say a freelancer, he needs a laptop, or he needs a phone, or there's a medical emergency, that you'll be able to provide empowerment for the customer at the point of sale and have that spread of payment with no cost on the customer. That's the BNPL proposition. Saying that, still regulators are trying to push more responsible lending, meaning is looking at their income, cash flows, different kind of aspects of the customer, financial and non-financial, before you take that decision to have a healthy portfolio from your side. But at the same side, it empowers the customer to take responsibly that loan at the point of sale without being in debt for what you call it, a want rather than a need. And that's where the progress, and we see more regulation coming out around that.
So you see a larger ecosystem evolving around it?
Yeah, the ecosystem is growing. Today, there is different BNPL players and different flavors. So you see in education sector, there is in real estate, like you can pay your rent, put deposit. Today, a car manufacturer called us and said, can we do BNPL for the first payment on the car? So it's becoming also on larger tickets, and that's helps the commerce cycle, because if the customer doesn't have the cash today, and he can take a purchase decision at the point of sale, that helps the merchant to sell more and higher conversion. And there's a lot of e-commerce sites. Let's take, for example, travel. If I can buy a ticket today over buying it 6 months afterwards, I'm getting a better deal today. So it helps him to take that decision. The customer has a win. The travel agency has a win. Everyone is a win-win-win on all.
Fly now and pay later.
Yes, there's a lot of flavors of
all right. That was an important point for us that you made, and I'm going to take that to Riccardo. See, this whole context, Riccardo, about dealing with customers who otherwise were kept outside of the credit ecosystem, right? And we're seeing increasingly the whole context of AI-driven, let's say digital lending in a broader sense, is really about driving inclusion. And this inclusion is actually dependent on making credit decisions, but those credit decisions are to be made not on the traditional credit data, because they don't exist. These customers have not been as part of the ecosystem, and therein comes the whole relevance of alternative data. So could you share from your experience from Credited and where you've seen in other markets, what role does alternative data play, and how do you see that evolving in the next few years?
Of course. First of all, I would like to thank Mawarid for organizing this event, and we're honored to be partner of their FinTech Lab. Generally speaking, the use of data is increasing in the role of credit in a day-to-day. It's not just to look at data in isolation. It might be invoice data, payment data, commercial data. All this data is then aggregated and look at enhanced format. So not only in isolation, with the use of machine learning to be able to build predictive data sets, predictive models that then interact instantly with the human. And because of these constant interactions between the human and the machine learning, we can then actually process much more information. So outside of the financial information, also internet data, web searches, and additional information that before would have been operationally very difficult to incorporate in the typical lending process for the benefit of these companies. And this effectively allows these companies to get on board on the lending ladder as opposed to being excluded as it was previously.
Interesting. So you see this a continuous journey. It's not a one-time process. You see this actually across multiple facets. We actually, through the day, we've been talking a lot about how fintechs have actually been making an impact. But here we actually have someone who's representing the incumbent community, the bankers. We have the president and co-founder of the Indonesian banking club here. And I'm actually going to ask you a very straightforward question, Raine. I mean, this is actually about, do you see the advent of all of these new age lending models as they actually becoming reality? And it's no longer about a concept, it's actually about how it's really making an impact. How do you see and how do you think traditional banks should actually be responding to this?
So basically, if you want to see the response of the traditional bank to this, I think that I can say one of the biggest bank in Indonesia, the president commissioners say to me like this: Raine, maybe the new one have innovation, but we have money, so we should collaborate first. Okay, that's the first thing. And then of course, let's say like because today I heard many of the panelists mentioning about the blockchain, tokenization, AI, and then this is also really, the hot issue at every country, especially for the AI, for the finance. Currently, one of I believe that most of you is now the ChatGPT or OpenAI. The OpenAI founders Sam Altman, right now, they are also focused to build the anti-AI. Okay, it's like a tools for humanity, because in the future, when AI handle everything on the banking system, AI should make should know is the user is AI also, so AI versus AI or the real human. That's why Sam Altman, they know that in the future maybe someone will use AI for the fraud something, and then right now they use the tools for humanity company and then it will be used on the banking area also. So when the AI system take all or the handle the banking system, let's say for the lending and others, they know when they check, oh okay, this one is not real human, but it's AI that want to try, to do fraud or attack the banking system. So yeah.
Well, that brings that whole topic of what risk that we are sitting on. There are opportunities and there are risks. Before I open up for questions to the audience, if you may actually go back to, and I'll start with you again, Hassan. We obviously are talking about, digital lenders and fintechs are redefining the creditworthiness, so to say, of what we say of the new community and access to finance. A quick 30-second view on what does it pose to us as risk and what does it pose to us as opportunity. And I'll take the same question around to others.
I believe at the end of the day, we should always find some kind of synergy in between both of them. There is a proper assessment to be done. We should be able to utilize all of the enhancement, whether digitally in this sphere, and make sure that we are aligned together on the right track. and then subsequently use this to our advantage. Hence, as a bank, again, I say it, we should not be considering these advantages, these lending platforms as a threat. On the contrary, they are complementing us, and we should together be able to enhance the overall lending sphere, enhance the overall lending mechanism for customers, enhance the overall journey for these customers as well, and do some kind of assessment and try to balance things out. There is a proper balance in place. Again, we are trying to work on this as we speak right now, trying to collaborate with the fintechs and lending platforms to be able to, as what Raine said, putting our money in, utilizing our systems, even utilizing the bank's compliance systems, KYC systems, to support these lending platforms to reach a proper goal. The proper goal is how do we upscale responsibly together.
Brilliant, thank you. Fawaz. Risk, opportunity.
I think the main risk that we're going to face in the future is finding talent that is ready for the coming world. So traditional banking is ending. So today the new product manager, they all have to be data-driven, AI experts to some extent, and they should be able to take those decisions online and use technology to reduce cost and serve masses. So I think talent is a problem. Currently in the region, we don't find the right talents that are ready for the AI world, who are equipped with those skills. But that's mainly the main risk we're facing. Eventually, everything can be sorted out. And the other thing that we're asking governments is open more data. So the governments have to be, the open data policies from different government agencies and ministries to have more empowerment, not just only for consumers, also for SMEs. Because there's a lot of government thing of high pressure, SME financing, this is a big risk for the economy.
Yep.
But eventually they're not taking their part to ease that journey of an SME financing, because it's not a balance sheet financing at all.
Well said. Thank you, Fawaz. Riccardo.
I mean, of course, I think, because we live in an extremely competitive environment globally, I think, of course, the key risk is obviously always competitions and, understand who you... Hello? Yes.
Yeah.
Sorry, so on competition. Because technological advancements are becoming so prominent, then of course, it's important then to collaborate between existing players. There is, I think somebody also mentioned here on the stage, like fintechs and historical lenders, they saw each other as competitors, but actually these are areas of collaboration. So it's important to try to find in what we thought differently before as an area of an opportunity. And this is how we could then collaborate together, technological companies, fintech businesses, regulated businesses, like Mawarid, they can actually thrive in the future.
Collaboration is the operating word, yeah? Raine?
Yeah, I believe the collaboration is the key. And then also that we can see that for fintech or the traditional bank, and then even right now the sector from outside from the banking, you said that the Karim or Buti, and then in Indonesia is Gojek. They are doing the super apps, and then at the end they also practically doing a fintech things or the banking thing. So I think the collaboration is the key. There is a risk, of course, but also there is a really big opportunity. Let's say like this, like one of the startup unicorn in Indonesia, they have like 170 million users. Okay, and then they are the right sharing application, and then turn out they also doing, buy the license for the fintech, and then they become the fintech. And then currently, in my country, there is a economic national council. They also think that one of the application that used previously for the COVID-19, and then it's already more than 250 million user right now, and then they also intent, okay, what if we convert this into the fintech? Okay, so basically, I mean, like I always say that the collaboration is the key, either with the technology company, either with the banking or the regulators.
Regulators, bankers, and fintechs have to coexist, but key is going to be finding some talent, as you say, and sorting the human capital issue as well. I will actually open up for maybe one or maximum two questions from the audience. Looks like everyone is hungry. Yeah. If there are no questions, then I would like to request you to give a round of applause to our panelists here for a wonderful session. Thank you again.